The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 21 April 2023. Well, a little bit different. I'm going to show you a little bit about what I'm going to talk about. And Las Vegas, which is coming up next week. I'll be talking about is silver an asymmetric trade? And of course, I have my normal disclaimer, and we all know asymmetric is when the downside is limited, but the upside is unlimited. And for those of you watching this on our YouTube channel, there is a QR code there. We do have a discount on the premium service, and it also entitles you to have a chat with me for 15-20 minutes to make sure you get started, or wherever you're at, to get going on this really interesting trek that we're going to see in the silver and gold markets over the next few years. So I started out on money and banking, and this was presented at the MIF Metals Investors Forum, and you can check out their channel on YouTube, Metals Investors Forum. Was on there with several colleagues. One was Tavi Costa from Crescat Capital, and both he and Chen Lin mentioned, this is from B of A Global Research and Bloomberg, but there is a record $5 trillion sitting on the sidelines, wondering what should I do? Should I go into bonds, stocks, real estate, or buy a business, or, question mark, move some of that into precious metals? So let's think about this for a moment. 5 trillion, if we took 1%, that's 50 billion. 50 billion represents the total silver market for 2 years. Now, if you don't think that 1% of that money is going to find itself in the silver market, please disengage from the free reports, because it's almost a guarantee there'll be at least that much, especially if the trends continue, which I believe they will, meaning stocks uncertainty, probably down, bonds down, although the pivot may happen sooner than I believe and take us back to zero interest rate policy. And if that happens, look out, gold and silver will take off. And then, of course, real estate, anything you can think of. So a lot of this money is going to find itself into the precious metals. And this is something where you can see from this arrow, I got this again from Tavi Costa, and thank you, Tavi, for sharing your work with me. I only took 3 of his slides, but they're very important. The gold S&P after yield curve inversions, you can see the performance, you can see where we are, and you can see what to expect. I'm going to dive in during this asymmetric trade, silver and asymmetric trade or not, quite a bit on solar. I've spoken about it for years, but my friend Chen Lin has done exemplary dive into it, meaning the technical changes that are coming. Most of this is from Photovoltaic Magazine and other sources, and he has a direct line on some of the Chinese sources, and I just don't read Mandarin, but he was kind enough to share some of these with me. And bottom line is this slide. There's a lot more I'll show at the presentation in Las Vegas, but the cumulative power capacity by technology from 2010 to 27. The IEA predicts that photovoltaics become the #1 by 2027. That is not that far away. So if you look at the other alternatives, wind, hydropower, bioenergy, coal, natural gas, even exceeds those conventional sources of power. Obviously, oil isn't in here, but that is a very steep, almost parabolic move up. And based on what Chen has discovered, that may be conservative. There's more solar panels that are going to be developed over the next few years. But on top of that, most will use more silver, not less. And that's because the return of kilowatts per square inch is far superior than what's used now. So going forward, photovoltaics are going to take over basically everything except oil, and the efficiency continues to increase. But the best way to get a return on it is actually solar panels that use more solar than present day. We can argue what constitutes a deficit or not, but regardless, this is what BMO Capital Markets and the Silver Institute show. And this is really not the truth. And what I mean by that is if you look at Silver Institute's report of a few months back, we had a deficit in 2022 of 200 million, which is, or actually a little more than that, where I'm circling my cursor right now. And if you look at the chart, it just showed maybe 25. So that bar right there should be way down here. So you can just extrapolate this, especially with what's going on in solar. That really isn't reporting as much as they really are using this industry. So this comes like that, but it really starts about there. So what I'm saying is that this deficit not only is going to grow, but it's going to grow far more than it shows on this particular chart. I always like to point out to the non-believers that equal amount of money invested in the stock market vis-a-vis the S&P 500 or the Dow Jones versus gold and silver, same starting point, same amount of money, you actually will have an outperformance of the stock market. And I know it's a combination. I mean, individual stock picking certainly could beat gold and silver if you're good at it. But on the averages, which are hard to beat, most people cannot beat the S&P 500. That's why there's so many ETFs and so many financial advisors will tell you just buy an index fund, buy the S&P 500 ETF. I can't beat it. Anyway, back on point. This chart shows you that as of 2020 or 2021 to the end of 2021, so early 2022, that both silver and gold outperformed. A lot of people say, well, why would I hold gold? It doesn't pay interest, blah, blah, blah. Facts are right in front of you. And I do think the gold-silver ratio matters. I was lucky enough to get in here when we got to like 125 gold-silver ratio. And you can see presently, and this is a little, should extend, but regardless, we're at about 80 right now. Remember in the hunt days, we did get to what I call the classic or the monetary ratio of about 16 to 1. Didn't last long, but it did achieve that. I think as this financial system continues to find new direction, we will see a possibility of that happening again. So from an 80 to 1 down to, say, 20 to 1 is a fourfold increase relative to gold's performance based on the gold-silver ratio. So any metals portfolio really should include some silver. The more conservative you are, you can go with the establishment, central bank, nation state, gold buyers, which is a conservative way to go into precious metals. But if you want to add a little zest to your life, consider the silver market. Many of you know I'm fond of saying that 90% of the move comes in the last 10% of the time. That is what happened in 1979. We had over an 800% gain from January 79 to January 1980. Yes, it only hit 50 intraday. Let's be clear about that. But nonetheless, if you go very conservatively, the average price for silver in 1980 was $20 an ounce. So at an all-time high of $6 in January 1979, buying that all-time high, you still would have done over 300% any time on the average price for the whole year of 1980. Not the 800 I'm showing here if you pick the top. Now, a little more about gold. This is from Kitco, Gary Wagner. Gold has found support above 2,000, aided by the belief that the Fed will pause hike soon. And you can see that it's been under that here recently, but it is basically assaulting the 2,000 level. And I forget the old high, but it's very close, and it will exceed that. We might get a cooling off here for a while. I actually expect that. And the old adage, sell in May and come back after Labor Day. The metals usually have a good seasonality in the summertime, and it's weak in the summer. Doesn't mean it'll be this summer because we've had, times when silver and gold did well during the summer months, but generally speaking, they lag. This is a press release from the Silver Institute. Global silver demand posts record high of 1.24 billion ounces. Remember, the entire silver market is 1 billion. That's about 850 million that's mined and about 150 that is recycled for 1 billion. So this shows you the deficit I talked about a moment ago of about 240 million ounces in 1 year. Silver market enters a new era of structural deficits. Silver demand following a strong recovery 21. Demand took a major leap last year with offtake growing by 18% to 1.24 million ounces, or 1.2 billion ounces, I should say. The supply was, they say 822, depends who you read. It's the Silver Institute has one number and CPM Group has another, but they're very close. Silver investment price, net physical investment demand rose for the 5th consecutive year to a high of 332 million ounces. India emerged as a top performer last year, registering 188% increase, with silver investment benefiting from lower prices and bargain hunting. There was modest growth in the U.S., where the market contended with prolonged product shortages and exceptionally high premiums. Silver market deficit, record global demand, and lack of supply upside contributed to last year's 237.7 million ounce market deficit. Outlook for 2023, this year is expected to be another solid silver demand. Industrial fabrication should reach an all-time high, boosted by continued gains in the PV market, which I showed you a little bit of my speech in the Las Vegas, Paris on is silver an asymmetric trade. A bit more, altenergymagazine.com, next decade, decisive for photovoltaic growth on the path to 2050. I know that's a few years out, but what's very interesting here is that Matt Watson, who does some very good work on silver, gold, not only photovoltaics, but a lot of research on the metals and semiconductors and e-waste. He does a lot. He's good at it. But what he suggested, what he stated not too long ago, is that the IRENA's target now is 75 terawatts. But the last time that they wrote about this, they expected 14 terawatts to be installed by 2050. So go back a couple of years, maybe a year, and it said 14 terawatts. Now it's 50, which is 4 times what their estimate was just a little while back. So obviously, the photovoltaic market is going to be a real driver in the silver market going forward. And I'll finish this week with platinum. Platinum prices hit 1,100 as it outperforms gold and silver, driven by improving fundamentals. You know, I talk platinum quite a bit. Recently, I've certainly been on the sidelines for a long time, and patience has its rewards at time. Am I lucky? Am I skilled? I don't know. What I do know is I bought it at 850. It's at 1,100 now, and it's outperformed both gold and silver in that time frame. Holding a position, I see at least 1,200. I may continue letting the market tell me what to do, not me telling the market what to do. I do not think that it's out of question to see platinum and palladium reach par. So pick a number, $1,400 platinum and $1,400 palladium. I think that's absolutely possible. In fact, I'm pretty much banking on it. And further, we could see where platinum actually goes above the palladium price. Platinum is a substitute for palladium, although you don't hear that very often. I've said it enough, you probably know that. So I'll sign off. This is David Morgan with morganreport.com. And remember the action items. You can subscribe to the premium service at that URL, themorganreport.com/join. Use the discount code WEALTH2023. You get $200 off the membership and at least a 15-minute consultation with yours truly. And if you prefer, you can just call in. That number is a Phoenix number. That's our support team at 480-325-0230. Or you can just email us. Or if you prefer, you can just scan the QR code. So I'll be back with you next week after a long trip to Vegas and back to give you another weekly perspective.